You are listening to MyHRBuzz, brought to you by MyHRConcierge. Hosted by Chris Cooley, we'll bring you various topics and guests to shed light on the often confusing world of HR and also employee screening. We'll be putting the human in human resources.
I want to thank you for joining us today on MyHRBuzz, the podcast. I do want to remind you, you can find our podcast at Spotify, on Apple, all the different typical podcast locations. And we do encourage you to hit subscribe so that you can always stay up to date with the information that we're putting out. And today we have Patti Reimer with us from BenefitMall. And if you've listened to the podcast, you probably know her. She's been on several with me, and she's kind of my go-to as it comes to cafeteria plans and HRAs and HSAs and all that kind of fun stuff. So I appreciate you joining me today.
Thank you, Chris. Happy to be here again.
Yeah, thank you. Well, today we're going to talk about ICHRAs, and don't turn us off. It's going to be a lot better than what it sounds like. I actually had a client the other day. I was trying to explain an ICHRA, and he said complicated, and so
Right.
he didn't even want to discuss it. So what we're going to do is we're going to make ICHRAs easy, and we're going to tell you how they can help reduce your benefit cost. And it's a great plan. So, and Patti is kind of the ICHRA queen, and so we're going to go through and kind of take away a lot of the taboos related to it. So, thank you, Patti. And so, tell us, what is an ICHRA?
Yeah, so an ICHRA at its core is an HRA. It's a individual coverage health reimbursement arrangement. And these accounts can be funded by employers for their employees to go out to the individual market or the marketplace exchange, enroll in an individual plan, and then use those dollars tax-free to cover part of their health insurance premiums. And this is all tax-free to the employee and also is a write-off to the company. And so a lot of employers would potentially give an increase in pay to employees to help them with these scenarios. But in this case, it does increase their taxable pay if you do give them a bonus or extra income. So, and it's not a write-off to your company if you do it that way. So if this makes sense, then it's a tax savings for both the employee and the employer.
No, that's great, and especially because to your point, this is a way for, and we'll talk a little bit about who it's good for, but for small companies to get in the insurance space, and to your point, not having to provide a bonus, or it's got some tax advantages. So, what are types of companies that these are beneficial to? What kind of case do you look for when you look for someone for an insurance?
Yeah, I would say about 80% of the groups that come to me are small groups. They're under 50 lives that are taking this up and traditionally kind of adopting these plans. In this small group world, I see anything from a one life group, employers who are doing exactly what I described. They're giving the employee, hey, here's 400 taxable dollars extra to your income each month so that you can go out to the individual market. They've already been giving these dollars. It's taxable to the employee. If the employee is a low income earner, there's a potential that extra $400 a month is going to push them out of receiving some government assistance that they may be receiving. So it's a really great way for small employers to not only offer the additional dollars for health insurance on a tax-free basis and create a write-off for their company as well. So in the small group realm, a lot of these groups don't have any health insurance yet at all. They've maybe looked at it, the cost of a group insurance plan maybe was outside of their budget, or they have a lot of employees who are already enrolled in the individual market, and they kind of prefer that because it gives them more options than maybe the one or two plans that a group might pick to present to their employees and give them options to pick from.
Yeah, and I think that's a good point because in just doing research, for the individual, they can go out. I mean, depending on your health status and kind of where you are, you can go out and you can tailor your own program, essentially.
Oh, yeah.
So you're not locked into one or two offerings. You can kind of do what you would like. So So it does provide a lot of flexibility for the employee as well.
Yeah. The employee's experience is pretty nice because their employer just determines what they're going to contribute to the plan, and they can even replicate if they have a group plan already and they've been paying 80%. They can continue to do that. With an ICHRA, employers can give a defined flat dollar amount per employee. They can give a percentage, and they can also give different amounts to different employees within a class or to family size, say, employee only enrollment versus employee plus spouse, employee plus children, or employee plus family. They can give different amounts to those. In the individual market, all of those
Mhm.
plans are age rated. And so your oldest employee is going to have a higher premium cost than your youngest employee. And so an ICHRA also allows you to give a larger contribution to your older employees than your younger, but there is a 1-to-3 ratio. So there is some control over the difference in contribution that you can give.
Right. Okay. So there's a lot of flexibility with this.
Oh,
There really
yeah.
is. And so let me ask you this. So that's your small groups.
hmm
But I also know a lot larger groups use it too. So what's the benefit for the applicable large employer or those groups that have to comply with ACA? Where does this kind of fit into their model?
Yeah, and the interesting trend in ICHRA in 2023 that I saw working for BenefitMall is just a large increase in large group over 50 lives
Mhm.
starting to quote these plans. Last year they came in a little late, so I would recommend if you're going to quote an ICHRA or go this direction, give about a 3-month leeway. So you
Okay.
have time to not only educate yourself, educate your client, and educate the employees on the difference. If they've been offered a group plan, explain to them the difference in this. It may sound like taking away a benefit, but in reality, you're giving those employees the option to choose from different levels of metal plans. They can choose whatever carriers available in their state. And so they can really make this fit for themselves and their budget and their own family. Whereas a traditional health plan doesn't always give you the options or as many options to choose from. When it comes to large groups for ICHRA and
Mhm.
affordability and all of that great stuff, there are these specialized administrators out there. Benefit Mall does have partners who can do this as well to help large groups figure out what the affordability threshold is so that they don't have to pay those A and B penalties. And so they can offer affordable, it's considered affordable group coverage if you offer an
Mhm.
ICHRA. And so you want to find out what is the minimum amount the company needs to offer for each employee. And we can even break this down by age and zip code for each individual employee.
Okay.
What is that minimum contribution the employer needs to make it affordable for those employees? And so there is a calculation. You would want to find out what the lowest cost silver plan is in your employee's zip code based on their age, and then make sure that that's not more than in 2014 anyway, and not more than 8.39% of their income. And as long as the ICHRA meets those standards, of course, you can contribute more if you want, but
Right.
that would be the minimum you would need to offer to make sure it's affordable coverage for your employees.
Okay. Yeah. So that's great. So they can meet all of that. And one thing that I looked at when I was kind of doing some research is a lot of larger companies too. This is great for those industries that have low participation.
Absolutely. Yes. And that's what I'm seeing. In the large group realm, we were quoting groups, over 1,000 lives. A lot of franchises
Mhm.
came in, low participation. For example, we worked with one group. They had a 60% increase in premiums year over year, and they just kind of threw their hands up and said, we need to find some way to control this. They had low participation, over 1,000 lives, and they had 12 people enrolled in the whole thing. So
Yeah.
it is a franchise. It was fast food, so I imagine a lot of younger employees probably waiving coverage because they're on their parents' coverage until the age of
Mhm.
25 or 26. And so, yeah, this can be a really great option. In that scenario, two of the 12 that were enrolled were also about to go on Medicare the next year. And so it was just really a perfect situation for ICHRA to come in and save the day. We were able to save them off of their current plan, not the renewal,
Mhm.
68% off of what they were
Wow.
currently paying. And through an ICHRA, you can also reimburse those employees who are on Medicare. And there's really not any options to do that for large groups. So this opens that up for those large groups to find a way for those aging employees who continue to work, which is more and more common, for them to have some tax-free benefit for their Medicare premiums too.
Okay. And I guess what they do or what they can do is they can those large groups. Generally, what happens is you have a management class, and that's where all your participation is.
Mm-hmm.
And then everybody else, there's not high participation. And so I
Right.
guess what you would do is you would have a class manager and above, which gets could get more of a traditional group benefit if they wanted.
Right.
Offer that in that class, they would have a higher participation. They would more than likely get better rates than if they did the whole group as
Mm-hmm.
one. And then you would carve out that class and give that non-manager class and give them an ICHRA, to where then they can get whatever coverage they would like.
Yeah, absolutely. And that brings up a really great point, Chris, on classing out with ICHRA. The government has given us technically 11 defined classes that we can use to create classes within an ICHRA. And so those are full-time, part-time, seasonal employees who are covered by a collective bargaining agreement, employees who haven't satisfied their waiting period for benefits. Some of these
Mhm.
large groups, in that first 90 days when you don't have benefits, they're offering these employees an ICHRA. Salaried versus non-salaried, temporary employees of a staffing firm, even 1099 contractors can be enrolled in this. It's not tax-free for those, but it would still
Uh-huh.
be a write-off to the company. And so that can also help with those 1099 contractors that you're trying to help out as well.
Right.
And then one of the classes is based on geographic location. And so in this scenario, especially right after COVID, when everyone just scattered across the country because everyone
Mm-hmm.
started working remote, some of these companies don't have a home state. They used to, but now they
Right.
don't. And so they were having a really difficult time finding group coverage that made sense, that would cover everyone in all of their states. And so you can offer, for example, a group health plan if your employees are all located in Texas, for example, at your home office, and then you have about 10 of them scattered across the country. The ones in the home office can be offered a group health plan. And then you can class out those other 10 employees geographically and say they're offered an ICHRA instead. They can go to their state and choose a health plan that's in their state and a carrier, and
Mm-hmm.
that can solve that problem for them as well. Or some of those groups can't get group coverage at all. It's either not going to be approved or it's just too expensive. And so
Yeah.
an ICHRA is a perfect scenario for that. One thing I want to add with the classes, if you do
Uh-huh.
offer a group health plan and you want to class out employees and offer them an ICHRA instead, part of the legislation took into account they don't want adverse selection. They don't want saying, hey, Susan got cancer last year, we're going to push her on
Right.
an ICHRA because she's raising our premiums. That's not allowed. If you have between 100 to, between 1 and 100 employees, you have to have at least 10 employees in a class. And so that's important to know. I do have a lot of employers and brokers that come to me and say, hey, I heard about this ICHRA. I heard that you can reimburse Medicare premiums through this for large groups even. On a pre-tax basis. And
Mhm.
you can, but you just wouldn't be able to class out by age or class out
Right.
by Medicare eligibility. You'd have to find a way to make them fit into those 11 defined classes that they've given us. You can also, the 11th defined class is a combination of two or more of the other classes. And so if you
Okay.
are struggling to make that minimum class size, you can combine more than one so you can hit that minimum.
Okay. No, that's and so I guess and for the most part, it sounds like as long as you're not getting into that discriminatory space where you're either
Mhm.
because they're sick or gender or race or any of those things,
Right.
you can class those out.
Yeah, and you bring up a good point. When it comes to pre-tax
Hmm.
benefits, there are rules by company entity type. So keep in mind if you are the owner or maybe a family member of the owner or a partner, there might be a chance that you may not be able to enroll in the pre-tax ICHRA because of the IRS code.
Okay. Okay. Good. And so, okay, so we've kind of outlined for the small groups and the large groups where it kind of
Hmm.
works well. It sounds like it's great for. I know we work with a lot of grocery stores and retail
Oh,
and
yeah.
those things. It's kind of a no brainer for those guys, I think.
Yeah, definitely.
Um, and so so kind of the next question, and I probably should have asked this at the beginning, is define individual coverage for me. So
Sure.
if you go out and I say you have to go get individual coverage, how hard is that for the employee to get?
Yeah, yeah, that can actually be a little confusing to an employee who doesn't work in health insurance.
Yeah.
And so these groups really need to lean on their insurance broker to help with those enrollments, or even a general agency like BenefitMall. We have those tools available. We can set up a broker with a health Sherpa link, for example, giving
Mhm.
them a marketplace to help those employees shop, quote, and enroll or even compare plans. And so there's a lot of tools like this. But typically, we'd want a broker involved because they know health insurance and they can advise and help employees choose what is a deductible, which one of these plans has a lower deductible, which plan makes more sense for my family's situation.
Right.
So, for the most part, you're going to want to lean on your health insurance broker or a general agency to help you with that piece. At Benefit Mall, we have an individual services team. And
Okay.
so they can help not only get brokers appointed with the individual carriers, they can help guide a broker on how to get certified with the exchange, whether that's the federal or the state exchange, depending on the state.
Uh-huh.
And then we also have an individual team who can help with the individual enrollment, so in-house enrollers that can help with that. And as these ICHRAs grow and continue to trend in the benefits realm, Benefit Mall is trying to make sure that we have all the solutions available to help brokers to support their groups with installing an ICHRA.
Okay. No, that sounds great. And so it sounds like it's not quite as daunting as it
No.
sounds as far as them going out and getting their individual insurance.
Not at
Uh,
all. Yeah. So you would have an insurance agent that would help just like they would with a group health plan and advising those employees on which plans to choose. And they,
okay.
like I mentioned, Health Sherpa is a link that sets up a portal for the broker to be able to quote those plans, compare them, and even submit enrollments for the ICHRA.
Okay. Now, as an employer, I'm going, okay, so I've got group benefits that I'm dealing with Blue Cross or UHC or whoever that may be.
Hmm.
I've got one carrier. I've got one bill that comes in every month. And now, if I'm talking about ICHRA, I may have 50 employees on ICHRA that are with 50 different carriers
Right.
on 50
Yep.
different plans. So the first thing that comes to my mind is, my gosh, this is an administrative nightmare. And so, how is that made easy? How is that made so where
Yeah.
it's kind of something that an employer, specifically, we talk about this is good for large and small employers, um, for those groups that do have individuals on an ICHRA.
Yeah, yeah, and there's some different scenarios out there that can help. So traditionally, when ICRAs came out, for the most part, what we were seeing is that they have been administered on an HRA reimbursement chassis. And so what that means is that those employees would go out, enroll in their health insurance, they would pay the insurance premium, and then they would log into a website or a mobile app with their ICRA administrator, submit that receipt, and get reimbursed for the employer's portion. Now, that
Okay.
can take 4 to 5 days for that money to get deposited into the employee's account for them to be reimbursed. And so, as you can imagine, for lower income earners, and I mean, I think that they say about 50% of our country doesn't even have $1,000 available in their account. So that's a stretch for those low income earners and some high income earners
Yeah.
to front that money, even if it's just for a week. So what we've been seeing, and I've been meeting with a lot of these specialized ICHRA administrators, they're doing this so that the employee has a payroll deduction for their portion of the premium by their employer. And that deduction can be either taken pre-taxed or post-taxed, depending on what type of plan that employee has enrolled in. So if they're off
Okay.
exchange direct to the carrier, they can have a pre-tax deduction through a Section 125 plan, just like a
Okay.
group health plan would allow them. So that's great. Not only more cost savings for the employee, but for the employer as well, because every dollar that's, not a taxable dollar, the employer doesn't have to pay payroll taxes on it. So
Right.
it's a win-win there. If an employee enrolls on exchange, unfortunately, the IRS doesn't allow a pre-tax deduction. So those ICHRA administrators will work with the employer to make sure they know what type of plan, whether it's pre-taxed or post-taxed. And then that administrator would pull 100% of the premium cost from the employer each month. And then we have a few scenarios that I've seen. So one scenario is a debit card solution. So the employee is issued a debit card so that when they enroll, they'll be provided with that debit card number that they can provide to the individual carrier to pay the payment. And
Okay.
then every month, that payment gets paid out of the administrator's account. They're watching to make sure that employee's account stays active so they don't get dropped from coverage. Because another hiccup that can happen on the HRA chassis version is the
Hmm.
employee literally just doesn't make the payment. Maybe they can't, and they get
Right.
dropped coverage if they don't make their payment, and they're not able to enroll back into an individual plan until January. So they might be stuck with no coverage for a period of time. So these specialized administrators can monitor that for you to make sure that employees' premium gets paid and they stay active. And in the debit card solution, I really like
Mhm.
this idea because with the debit cards, when the employee is terminated, you can just shut off that debit card and they'll need to make other arrangements with their carrier to make the premium payment going forward. We have other
Okay.
partner who does a bank account solution. So they provide the employees with a bank account and routing number to make the payment. And then the premiums go into that bank account every month. And then that administrator pays those premiums, making sure that they stay enrolled. And if the employee leaves, then the employee would just need to find a new payment method to
Okay.
pay their individual carrier.
No, that's interesting. That's good because to me as an employer, my first thought, my fear would be, I'm an
Right.
employee. I sign up for individual coverage um, for a month. I get my X dollars somehow. I
Mm-hmm.
cancel it, but that employer keeps paying me. It
Right.
sounds like there's a process there to make sure that that doesn't happen. If they're not
Absolutely.
enrolled, they're not getting their piece from the employer.
Yep,
Um,
exactly. Yeah, so it really simplifies it. And these administrators are giving consolidated invoices to the employer each month. So that it's just like a group health plan in theory, where
yeah,
they know exactly what the cost is, they know what their share of that is, and it keeps those employees active on their plan so they don't lose coverage.
and there's no participation requirements because everybody's going to
No.
different carriers. Um, and I guess let me ask you this for small groups. Typically, one of the things when we talk to small groups, and we and they want to talk to us about us, maybe they have benefits questions, those kind of things. Is when they go out and they get that insurance, a lot of these carriers are going to require 50% contribution from the
Right,
employer.
right.
So my guess is with these, there is no there's no requirement there. So they
No,
could do 10%, they could do 100%.
absolutely. Yep.
So then
There's
they
no
can kind of fit it to
requirement.
their budget.
Exactly. Yeah. Absolutely. If the employer can only afford a little bit, that's better than nothing to the employee,
That's
right?
right.
And it is tax free. So they can use those dollars for those expenses they already have and they're already incurring.
Okay. Now, does this, so we say individual coverage. Is
hmm
this health only? Is this health along with supplemental where they can maybe get dental vision? What's kind of included in this?
Yeah, great question. So it truly is your medical, your health insurance
Okay.
only for those premiums. Employers can also allow employees if they have leftover dollars each month.
Hmm.
So say they want to give $500 a month per employee, and one of those employees chooses a high deductible health plan, a bronze plan, and the cost of the premium is lower than what the employer is offering them. There'll be leftover dollars at the end of the month. Normally, that will just forfeit back to the company as savings. The employee didn't
Okay.
need it. But employers can choose to allow employees to use those dollars for out-of-pocket expenses, just like a flexible spending account, the same qualified expenses. And you can even limit those because it's an HRA that's very customizable by employers. You can say, if you have leftover dollars, you can use this for your copays and you can use this for prescriptions. And you can limit it. Or you can say they can use it for their medical, dental, and vision out-of-pocket expenses. But for dental and vision premiums, you wouldn't be
Right.
able to use your ICHRA for that.
Okay. Okay. Yeah, and I had not thought about that. That's a good point. Is if the employer gives them 500, their premiums are 100, 400, what happens? And it
Yeah.
sounds like it's not like they get to put that $100 in their pocket.
Nope.
It's
Yeah.
not a bonus.
If they
Yeah.
don't have a qualified expense for it, then the money just forfeits back to the company. So it's really customizable. If your company has a rich benefit or a rich budget for benefits, you can really make this a rich benefit, even in my opinion, better than some of the group options that are out there, and do it all through the ICHRA, which is great.
Okay. And it sounds like there are administrative companies like BenefitMall and there are others that you mentioned that can
Yeah.
kind of make this as, I'm not going to say set it and forget it, but it is something where that employer, this isn't anything where that employer's all of a sudden got to spend 8 hours a month trying to figure all this
No.
out. They have companies that will do that for them. Um, and then I guess at that point, it's what's the economics say? My assumption is they would probably save more than the cost of the additional administration using the
Yeah.
administration company.
Yeah, absolutely. And so we do have all levels of partnerships when in the ICHRA realm. We have the reimbursement on an ICHRA, or sorry, on an HRA chassis in-house at BenefitMall. We have quite a few groups that we're administering in probably under 10 life range. And then we
Mhm.
have real specialized administrators. And we're actually working to add additional because we had so much business last year for 1-1 that our specialized partner couldn't take on any more of our quotes, which is a really good
Okay.
problem to
Yeah.
have, that there's so much business that we actually need additional partners to be able to manage all of the business that's coming in.
Well, I really think after we talked, and like I said, Patty's kind of my go-to in these kind of things. And so we were talking about this, a couple months ago,
Yeah.
and I was not as familiar with it. And so Patty was telling me about it, and it just seems like a very valuable option
Yeah.
for both small and large companies, specifically large companies that are in the service industry,
Mhm.
that have
Mhm.
that kind of lower earner, low participation base, where they
Absolutely.
can really use this to offer a good benefit. It may be a better benefit than a group for that class, but also save money. And
Absolutely.
I think it's just grossly, just from what I've seen, I've done some research, and it just seems like it's an underutilized. Even though, as you said, it's growing and it's getting bigger and
Yeah.
bigger. I think it's a great option that a lot of people don't know about, and hopefully, that's
Yeah.
one reason I wanted to talk to you today is to get the word out, because I really do think it's a great option for people.
Absolutely. Yeah. And it continues to trend upward, especially in the large group realm. We saw 144% increase year over year in large groups taking this up, which was interesting because traditionally it's definitely been under the 50 life range that we see adopting these plans. And a good number of them, again, are groups that didn't offer any coverage or had no options before ICHRA came about.
Well, that's great. Well, I really appreciate you joining us. Again, I think it's a lot of great information. Is there anything
Yes.
I left out I didn't ask that you wanted to?
I do kind of want to touch on
Yeah.
the subsidy in the
Yep.
exchange.
Okay.
So, if you're a small group and you offer affordable coverage to your employees, by virtue of being offered affordable coverage, employees don't have access to the subsidies or premium tax credit that they could get potentially based on their income if they enroll in the exchange. If you calculate affordability. So you'd want to, as a small group, find out what is the minimum amount I need to contribute to an ICHRA for it to be affordable. And then as a small employer, once you have that threshold for each employee, you're going to want to figure out, do I offer affordable coverage?
Mhm.
Or do I go just slightly below that or well below that, depending on your budget, and offer them unaffordable coverage? So a lower ICHRA contribution, making it less than 8.39% of their income based on 2024's numbers. If you offer them affordable coverage, if they go to the exchange, they then have an option. They can choose the subsidy or they can choose your ICHRA. They can't have both, but that gives them an option to take whichever option is the best savings for them personally. So, as a small employer, you have some decisions to make there.
Okay. And for the employer, that there's not a plus or minus to that, if you will. It sounds like it's really more of that benefit to the employee if they want to
Mhm.
allow them to get that subsidy or not. But if they get the
Yeah.
subsidy, there's no penalty for the
Right. There's
employer,
no
correct?
penalty for the small group to offer unaffordable coverage. And even just go a dollar below that threshold if you have the budget to do it, just to give your employees the option. If they are in that income range where they can get a subsidy, right now the subsidies are great. And
Mm-hmm.
so that's just added cost savings to your company. You offered them coverage and, decent coverage, but the subsidy is just a greater savings to them. So they have an option, which is really nice.
Yeah, no, that's a great point. And yeah, it sounds like that, doing that, getting it close, but giving them that option
Yeah.
would be great for the employee.
Yeah, absolutely. It can be great for the employer too, because
Yeah,
potentially our government will help pay for your employees' premium rather than you. That's a great scenario for a small group.
they need to give us some money back, right?
Yeah, right?
Somehow. Well, good deal. Well, no, I really appreciate it. I appreciate, your time and talking to us about this. And if anybody, if there was somebody that's listening that needed to reach out, how could they get in touch with you?
Yeah, they're welcome to reach out to me at Patti.Reimer@BenefitMall.com. That would be PATTI .Reimer, REIM as in Mary, ER at BenefitMall.com. You can also reach out to me by phone at 925-969-3203.
Great. Thank you. And again, we'll have you on again for sure. So, but I
Beautiful.
appreciate you jumping on today.
Thank you so much, Chris.
Yeah.
It's always a
Yeah.
pleasure.
Thank you. Well, I appreciate everybody that's listened today. Again, you can find our podcast wherever you typically find podcasts. Make sure to hit that subscribe and that like button. If you like it, share it. If you have other people you think that may be interested in it. If you have any suggestions for topics, you can always email us at podcast@myhrbuzz.com. And again, we appreciate you listening and look forward to speaking to you next time. Thank you for listening to the MyHRBuzz podcast presented by MyHRConcierge. For more information on this topic and many others, please visit our blog at www.myhrbuzz.com. It's a free resource and has a lot of great information on HR and employee screening related topics. If you like the podcast, please do 3 things for us. 1, leave a review. 2, subscribe to the podcast. And 3, tell a friend. Our podcasts are available on iTunes, Spotify, and many other places where you get your favorite podcasts. If you'd like to provide ideas or feedback on future shows, send us an email at podcast@myhrbuzz.com, or you can reach us at 855-538-6947, extension 108. This is Chris Cooley with MyHRConcierge. Thank you for joining us, and we look forward to sharing more topics with you in the future.